And I'm going to record it so that if you have a problem again like this, you can restart. Yeah. Okay. Okay. So before we're going to do our layout. So me, I'm going to put Temi Abiola Learning. Okay. Then you say create. So this is how your screen should be. So you go into new window, click new window, then now do option chain, the one at the first. You should see option chain. Look, okay. Now you're gonna drag this thing. So okay. So option chain. You've seen option chain. Click it. Okay. So option chain. So you see my you see my mouse. I'm gonna drag this thing so that I can go down and fill up your left space. Did you see how I did it? So it's like this, right? Yeah, you want to drag it down. Perfect. Then you go back to new window again. 100. So you know how to go to the strikes, right? You go to the top, yeah, and you click on 100 and you enter. Okay. And then you go back to new window. Now we're going to look for watch list. Then we'll put it there. You see it comes up on the right side. Perfect. Then there's a plus sign on beside watch list. Then you click portfolio and add portfolio. Okay, perfect. Let's go back to new window, chat, look for where, then do chat. It will come up below. Now you want to drag it so that it can fill up the remaining place. So the same way you drag the other one, right? See this arrow when you go to the drag it up so that it can fill up your stuff. So your screen should be looking like my screen. Is it looking like okay. Yeah. So now you see at the top there's a padlock that is green. So make sure that all let me use my what's it called to show you. This there should be like something like a chain on all of them. They are all green. They should all be green. I'm gonna show you. See here where I'm circling. There's a chain here, green. Did you see that? Is it green? Then the other side, is it green? Where I just circled green. Then the bottom, is it green on the chart? Okay, fine. If they are not the same color, they won't communicate with each other. So you want to make sure all of them are the same. So now you go to that padlock sign and you lock it. You have to, yeah, when you lock it, it should no longer be showing green. It should be like, yeah, it's locked. So now you shouldn't lose this screen again. Okay. All right, good. So that was long. No, no, that's fine. Yes, that's yeah. It looks like my screen. Okay. So let's choose our ticker symbol, right? Let's start it first things first. This top part where you see Tesla here, there's an arrow down here. Can you see where I'm circling? Yes. I'm using my I'm using my big screen. Oh, oh really? How do I? Let's see. Okay, let's see. Is that better? Okay. Now it's good, eh? Okay. So you can see where I just did this Tesla here, up here. So yeah, when you click on that, when you go, you see there's a drop arrow, right? Exactly. So now this is where you're going to be putting your symbol that you are looking for. So for example, let's use Tesla, Testela, and you put enter because you already know it's Tesla. But when you are starting, if you don't know the cast symbol, you type the name and you see where it says it comes up as this. Then you go into yeah, the first one, and you just do enter again. Then it will come up on the side and say shift enter. Just do enter. Don't do shift, just do enter. Just click enter. Okay. So has it changed to Tesla for you? So you are there now, right? Yes, the first one. Yes. Enter. Don't be clicking it. Just be doing enter. Don't be because you can mistakenly go and click a different one. So next time, just click. Once you're on that first one, your arrow is there. Just use your keyboard and do enter. Yeah, hey, as you are there like that, just do enter with your keyboard. Then you see at the top, it will tell you something about shift enter. Then just do enter again. Don't do shift, just do click enter with your keyboard. Did it change? Okay, see my I'm gonna do this for you. Tesla. I, as I click the name now, I'm just gonna do enter on my keyboard and this comes up. And when it's up, I'm just putting my cursor, my stuff on, you can see my on the first one, and I'm not using my mouse, I'm just doing enter again. Then when I do enter, I can see up here it says shift enter, right? Just click on that. Yeah, yeah, yeah. Mhm. Nasdaq, yeah. Mm-hmm. Yeah. So you can see it has changed, right? So that is how you are always going to, if you are changing between different stocks, that's how you are going to be changing between different stocks. You just put the name, you do enter, it will come up because they are different. Some of them have different and whatever. You don't want to look for the one that just says options, it's stop, right? And just click enter, then do the same thing, it will change. And once it change on one side, the option change, it should change on every side. Your candles should change too, everything should change as well. If it doesn't, that means it's not communicating. Then you want to make sure that all the arrows are green. Okay, because if not, you go and buy another stock meanwhile you are trying to trade for something else. All right. So we'll now go into what's it called? The strike price. Remember what I said, the strike price. This is the price at which like the stock is trading at, right? Correct. So what this part, this is calls on your left side, right? Calls on your left side and puts on your right side. Do you remember what calls and puts are? Perfect. Good. When it's going up, we're calling it up based on what the chart tells us. And if it's put, we are calling it down based on what the chart tells us. Okay. So this part that says, you see this line here? Can you see this place above here on the calls? It looks like it's purple. Perfect. So what we call that is they are in the money. It means those people now, the stock is already trading at that strike price. Tesla has passed 360, 392. It's currently at 400. That's what it's telling me because this is where the line is, right? It's telling me that it has not yet gone to 402 down all the way to 440 something because we have 100 strikes. So if we are buying, we are going to be buying either here at the money, we call it, or in the money. But you see, it's so expensive, Abby. 410. What does 410 mean? It means $4, but remember every contract is times 100. But 410, right? For one contract. And we see that our remember our option in our volume, we like volumes to be big and we like our option interest to be big. And this looks pretty decent. But you are not a day trader. If you're a day trader, you can trade the day. So let's look at the time before we even start talking about this. As swing traders, remember, we are trading at least 4 weeks to 6 weeks out, right? So I'm going to put, can you go to your time where it says months and put 6 months? Change it. Mhm. Okay, I can highlight it for you. Yeah, here, see it here. Can you see it? Yes, there's a drop down arrow there. Oh, you don't have. How is yours showing list view? Okay, is yours showing list view or I think yours is not showing list view. What's this showing? Is this showing list of tabbed? That's why. Yeah, that's why. I just want you to put 6 months. So this is where you can look at change the time zones if you're trying to pick if you are going to buy a year out or whatever. This is how you're going to change the time so you can see all the different options, right? So I want you to put to 6 months so that we can um look at them together. Have an excellent, yeah. Okay. All right. Good. What did he say? What did he tell you? Did he say something is too long? I think you have left it should come up. I think it's too long. Too long. Yeah, I figured that's why it's saying that because you're using a smaller system. Okay, go back to tab view. Let's do tab view. It's fine. Go back to tab view. I'll change mine to tab view because I'm using a bigger screen, right? So I if not it will be very long. That's what they're trying to tell you. So when you are on tab view, it's still the same thing. It's just how you're going to be seeing it is different. You can see up here, you can see the dates. Okay, so now you're going to be clicking. So you can see it says March 20th, April 17th, May 15th. So when you are choosing, that's where you're going to be choosing. So let's open for March, let's say April 17th. That's at least a month away. I'm gonna make this bigger. Okay, so still the same thing we're seeing, right? Our call section is here. Our puts is still the same, right? But we're just using a different view. Okay, so if we say as swing traders, we don't like to buy closer to the day. At least we want to give ourselves some time, right? 4 to 6 weeks out. So April 17th is at least 5 weeks. So if calls, if you were to buy, this is the strike price, telling me this is the price the stock has been selling. And we know that right now is at 400. These ones that are purple, they're already in the money. That these people are already making their money because it has already reached the stock price and it's already trading there. But all this part is not yet in the money. So we call this one here, this one line immediately, and it will change depending on where the stock is going. But the line immediately below this, your purple line, we call it at the money. Honestly, if we were to buy, the sweet place to buy would be either this first one or this second one, and I'll show you why. Open your strategy builder, open this place, turn this place on, strategy builder. Let's turn it on. Okay. So let's click buy on your 405 call. Buy. Just click buy. It will appear at the bottom. No, no. Yeah, so you go to ask where it says ask. You see it will, as you are there to show buy, then click it. Right. So it's telling us if we buy this 405 call, the delta, can you see the delta? Remember what we said about the delta? For every $1 move it makes, this is how much you'll be getting. So 0.529. So let's say that's 529, right? 0.52. We like our delta to be at least 0.3 to 0.7. That means you're making good money, right? For every $1 move. So if Tesla goes from 405 to 406, that's what you make. If it goes to 407, every point is going, you're going to be making. Does that make sense? Good. This is the one below. Now let's look at why I said you want to. These are the nice place for you to at least 1, 2, 3 should be the place you kind of trade, but also you want to be mindful of your volume and option interest. We are not seeing option interest right now because market is not open, but we know people are interested in the stock, right? Okay, I'm going to clear all legs, clear this, then let's see the one that is purple already. So strike 400. So when I tell you strike this, it means 400. And I say buy a call. You click 400 and do buy. What do you see there for the delta? Good. Sure, you see it's still 0.5, right? It's still high. So who bought at 400 and who bought at, I'm just going to click. this thing, but the one that is below the 405, you see that it's 529 instead of 560. Is a little bit different because the person that bought here in the money is making extra 40 something dollars, right? But now if we now go to the third one, 410, let's see the delta. Can you see the delta now changes to 0.496? So the more you are going away from in the money, we call it out of the money, the lesser profit, the lesser money you make per the dollar. But the thing is that not everybody can afford to buy there, right? That's the truth. So if you keep going down, let's say, oh, we only have 500, let's say we only have $500. So look, I want you, Abiola, to go down and Taufik, look for the one that has an ask price of 400 or 500. I won't show you. I want you to look for it yourself. No, the ask price. That's how much you are able to pay now for the contract. The strike price is how much the stock will be trading at, but the ask is how much you are going to pay for the contract. Yeah. So look for, say, oh, you only have $300 to invest for this trade. So look for the one, go down, look for the one that the ask price meets your budget, and tell me what the strike price is. Yeah. Okay, let's say you only have, eh? How much? Which one? So what's the strike price? No, 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 strike price. So if I tell you, you say I only have 400, okay, I only have $350, so at least 300 to invest in this. Now I say, okay, look for on calls, and we have looked at the chart. So it's assumed that we looked at chart and it's going up in the market, and you only have 300. Which of them would you buy? Which strike would you buy? Okay, let me give an example. So, yeah, should I give an example? Okay, so I have $600 I want to use. Now, when we are going up, the market is telling me, hold on, my stuff is, all this is like 2,400, 2,200. I can't. So I'm going to look for 600. When I come here, I see strike 465. Strike 465 is about 630. I think I can afford that because I have $650, right? And so this is the strike 465, but this is how much I can afford, 630. Mm-hmm. The strike price can be 395 for calls. So so you say you are buying which one? How much? 29. Oh, 29. No, I gave you an example. I said $300. $300. You have 300. So you have 300. Where are you going to buy? Okay, I'll show you where you buy if you had 300. Remember this 6 points or whatever is times 100, right? So anything you see here is times 100. Yes, yes. So if you have 300, this is where you probably will be. Strike 495. 305. So $305, right? Because that's the closest to 300 because there's not exactly 300. So go to this place that says there's a bracket box here. Open that box. No, at the top, there's a box here at the top. Yeah, see, I just drew a line there. Yeah, okay. So can you, yes, yes. No, 305. Yes, the strike price will be 495, which means we're calling it to 495. Does it mean it will get to 495? No, but if it's going in the call direction that is going up, you'll be making your money, right? Remember. So, but you are buying here because you can only afford $305 right now. So if we open 305, let's open it. Let's say, yes, we looked at it, it's going up, and this is how much you can afford. We'll say buy. Can you see your delta? Exactly. And it's telling us that for every dollar move or so, you make 100 bucks. It's already kind of, going low, right? Smaller because you are going out of the money. So that's what it means, out of the money, because you are buying further out of the money. Yes. But when you're buying in the money or at the money, in the money is like this purple part. They are in the money. Exactly. Let's go to 390 now, for example. If we were to buy 390, say, okay, we just want to buy 390. Can you see? You will spend 32, but you see your every move is 621. So even if you only just goes two moves and you get out of the market, you make about 1 2. Does that make sense? But that one is like it moves slow, especially if the option, the whatever is not moving fast. For every dollar move, you make about 100 bucks. But if it's not now going fast in your whatever as much, you might just see it crawling. And unfortunately, the further you go out of the money, the same way. If we look at this one, we only have 100 bucks to play with, right? 0.043. It means for every move, it's only $43 you make. So the sweet spot is we want our delta to be at least 0.3 to 0.6. Yeah, 0.7 is at the top. It's going to be in the money. In the money. Exactly. In the money. But when you are at the money, so these first two lines, you still get a good, buck for your, and you can see the option interest is quite high too, right? And also you want to be looking at volume when it opens, like volume, because if there's more volume and interest, it pushes it a lot. Like this one now, say we don't have enough money, but we want to buy. You see this one that says strike 500. Go to strike 500. You see that the option interest is 19,000 people are interested in this, and four, huh? Okay, yeah. See it now. So I just, yeah, 19.2. That's called the option interest. That people that are interested in this. That's big. I like that. And then 4,000 people are actually in the trade. That means there's volume that it can be moving. So if I open it and I see that, okay, what's this strike price? 0.09. Well, if it moves, it shows me that a lot of people don't have money that they're just trading with 269, but there's enough volume that it will move. Because if you don't have enough volume for it to move, it will crawl. That even if it moves once, before you see your profit, it will be like, you get what I mean. But when you are close to the money, in the money or at the money, it doesn't really make any big difference because your delta is already high and the option interest is always going to be high. Can you see that? Say, go ahead. Yeah. Mhm. No, it just shows you that there's activity. There's a lot of activity there. So for this one now, you can see, let's look at it on the put section, right? Let's go to the put side. Can you see here? There's not enough option interest. It means the market is really not going down because put tells you the market is going down. This is their, what's it called? This is, this is the inverse of, see, there's nothing here. Nobody is here. Volume, back, but nothing is here, right? Can you see? There's not, yeah. If you are a day trader, yes. There's actually a, what's it called? A trick there. If you are a day trader, remember we talked about day and swing, right? If you are the person that you only trade during market hours and you don't put money overnight, that is actually an indicator. So mostly towards the end of, close to the end of trading hours, my mentor will look at the option interest based and the chart too. If I'm seeing more people going to the put side, so if for example this is 1.6 and that's 4.8, what does that tell me? It tells me the market is actually going down. So I will use that, also look at my chart and make that decision that yes. Because if there are more people in a trade going down, I'm interested, then it tells us exactly. But that's only if you are doing day trading, right? Because you are in and out immediately. You are scalping ahead. So, and this is what actually happened on the day market closed. It went up, then went down. So you can see a lot of people were in the market for puts because the market came back down, right? Okay. I'll give you another. Okay, if you were to buy, oh, you only have, okay, let's go. Say you want to buy 110 days out, or yeah, let's say 110 days out, or 100 and more than so, and you can only afford 500. Find it for me. So say, okay, so look for June. June, and say you only have $300, and we have determined that the market is going up and we want to buy a call. Yeah, you only have 300. So look for the strike price that you can afford. 300, between 300 to 315. Okay, let's see. Yes, perfect. So your strike will be 620. But can you see that there's really no volume, no option interest? Do you do you probably want to buy that? I probably would not. Why? There's nothing happening there. So I might go to the one that is even lower than it, the one that has either 1.2 thousand or the 8.5 option interest, which is 650. Because exactly, let's open the one you wanted, 620. Let's open it first. Say buy that one. Let's see. Okay, now let's go to the one that says is 8.5. Let's see that one. Is lesser, but there's more interest in that one, and volume is a little bit bigger. It means it will move faster than that one. Does that make sense? Because if a lot of people are not interested in it, it's not going to really move. So you might see that the market is going, oh, that is really going in your direction, but you say, I'm not making any money. Why? This is why. There's nothing happening there. So in as much as you pick the right strike price, you want to make sure that there's option into and there's volume to push it. If not, you just be crawling. The market will really be going up. You see, it will open at 400. Tesla will open at 400 that day and will get to 410. The thing has only, you'll be seeing only $5. And you'll be like, how? Do you get what I mean? But that's because nothing is moving because there's nobody inside there that is saying they're trading that to push it up for you. That's the thing about your option interest and your volume because you need volume to momentum, right? To push. Okay, let's do, I'll give an example for the put side. So say, okay, we did our analysis and market is going down and we want to just buy maybe um, 47 days out because we don't really want to stay in the market so long, even though we're swinging, but we just want to ahead and it's going down back to the next key level. So you can only afford 500. So like we're going on the put side. April puts, you're buying April. Let's do April 1 month and you have 500. So what strike price will you be doing? Because put, we're putting it down because you say, oh, we wake up tomorrow and Tesla decides that it's going back to 390. Say, okay, you know what? I'm going to buy a put because I see that it's going back down and the next place it will hit will be 390. So I want to buy puts. So you only have $500. 350 for puts when you have it's put, not calls, puts. You have 500. So which strike price will you be going for? No, you have 500, so you can decide if you're going to buy 470 or 495 or 525, depending on how much you have, right? But that's how much you have. So look for the one that's closest to how much you can afford. Yes. Another rule of thumb, don't ever spend all your accounts on one trade. If your account if your account right now is 500, you want to be spending at least 20%. So 20% is not big. That's like $100. Okay, so let's work with $100 there. 440. Your strike price, no. Your strike price, no. Your strike price, remember your strike price is this one in the middle, right? Yes, yes. So what I'm asking, what's the strike price you're picking? So this is the strike price. So which one? So you have to show me based on the strike price, and I can. But if I tell you on the chart, like April 17th strike 270 put, right? Buy 245. That's 70, 375, 345. That's $660. You can you afford that? Can you see? So show me where it is on the strike. What's the strike price that is connected to? Yeah, so where is the strike price? So go to the middle. Yeah, this middle 345. 3 345 can be. So are you, how many strikes are you using? Oh, you are using April 2nd. I mean April 17th. I said 14. Yeah, yeah, yeah. That's the problem. Sorry. My bad. I said April, yeah, April 17th. I'm like, so yeah, yeah, you have 500. Yeah. Yeah, okay, perfect. Okay. So if we're to open that, open it. So your delta there will always show negative. Remember, because you're in put side to show you negative, right? But it's still the same. If it's still the same story that if it's going in your direction, you'll be making is 0.1 now. So you see how little is like 118, right? For the move. I can see that there's really no enough volume. There's really nothing really great about that, right? But it also tells me that the market is not going in the push side. That's why there's not enough action here. Would I want to buy this one that doesn't have enough action? Probably not. Yeah, not even up to like 289, the volume, right? I probably don't because nothing might really move for me. So you might now want to go and look for the one that has good interest and good. So if we see this one that is 515, so you can see the one below 515 has like more tear and more people is more likely to move than the other one. But the goal is what I'm trying to get people to do is to know how to pick your strike price, your whatever you are trying to buy, and connect it to the strike price. As long as it's going in that direction that you are wanting it to go, that's where you are making money. If you buy a put and the market starts going to call, you won't make your money. If you buy a put and it starts going down true, that's where you, so your delta tells you for every dollar it moves, that's how much you're going to be making. So you can. Mhm. No, so the thing is that's why we're doing our charts, right? That's why you do your chart before you enter the market. You can't just enter the market. And you should, that would be like our second week. You have a risk, a traded risk to reward ratio, right? If the market goes start going against me, so that's why we're buying out. We're not day traders, right? And when we do our chart and we know that, okay, say it goes, jump, pulls back down to 390, and we see maybe that's a support or a resistance there, we'll now wait for what is it going to do next, right? If it keeps going down and I've lost 30% of my whatever that I put in, and I have 60 days, am I going to go out? No, I'm not going to go out because I still have time. Because if I, exactly. Yes, because I still have time for it to bounce back as long as I'm seeing that is when it gets to that support and resistance, I see that it always either bounces back here, I will leave it. But if I'm like 30 days is already closed, I will get out of the market. That's my cap of tell me leave this market is not going to work in your favor. But if that, yeah, I'm not a day trading. Once it's already 10%, I'm already getting 10%. I'll get out of the trade because if I do day trade, when I do day trade, once in a while, my profit take is 5% to 10% because I'm in and out. 5 minutes, I'm in and out. So if I put in 1K and I make 5 or 10%, that's you understand, it's out. I'm not leaving money overnight. But if it's not going against me, 5%, I'm out. I'll rather lose $50 than lose 200 bucks. Because when you are doing day trading, you are buying times that let's go, the times you are buying are short times and it's cheaper. But when you are buying, the farther you are going, you can even buy up to a year. It's more expensive, but you have so much time that you make so much. If you are close to in the morning, you make so much money, especially if it keeps going in your direction. But when you are so close, you don't want to play that because you have Tita. Remember, Tita is not our friend. So the closer it is to the expiration date, which is all these dates that are showing up here, the June, the closer it is to the expiration date, Theta is going to be coming after your money. But when you're still far out, I still have 90 days. I'm not going to jump out of my trade because especially when I do my charts, right? So today is just to let people know how to get into it. So I'm going to give you two more practice. Then we open our charts for what time are you going to work? So we'll just okay, so we'll just do a couple more. All right. So that like I said, if it's 30 days to and I have not made my money, which most time doesn't work, that doesn't really happen, I would have gone out. So another thing is don't be greedy. Have a plan. I told you people that first day. When you are entering a trade, have a plan. So for you now, I could be saying, you know what, for now, we're going to start with say if we make 10% or if we make 5%, we're out. So what you would do is when you now enter the trade, at the time you enter the trade, which we're not executing any trade today, you will now calculate your 10%. Say you enter with 500, 10% is 50 bucks, right? If you bought, so you when you enter for buying and the thing has bought, you will now do sell at 550, for example. It will sell, that's your 10%. You carry your money and it might not reach it might be the same day that you place the trade oh, and it sells. It might be the same minute you just get to your car, it has sold. But guess what? You've made your that was your plan that when I enter this trade, I want to make 10% and I get out. Me, because it's swing, I do 30% and I get out. If I do buy 90 days out and maybe it pulls back and I've lost maybe 40% and I have 3 months, I'm not jumping out of that trade because I have 3 months. And because I look at the chart that maybe it has got to a key level, it will bounce back there, right? So our chart is our friend. What we look at first. This is just showing you how we're going to be. This is the ticker symbol. This is because if I were to call in our chart and say, oh, I'm looking at this right now and it's going up. This is maybe you should want to, I'm going to buy this one. You should know how to enter a trade, right? But the chart is where we're going to do our analysis to say, oh, yes, the market is going up or is going down. Should I enter? So most times I can enter a swing trade today, but before I get to work, it has sold. But my intention was it's a swing trade, which is that's why I buy far out. So even if it doesn't sell that day, but if it's still moving in my direction and I've not reached my 30%, once you reach my 30%, it will sell because I automatically put me for myself. I automatically put my 30% because sometimes I've been greedy in the past where I've seen it keep going. I'm like, okay, you know what, let's keep it moving. You know what I mean? Oh, 90%, let's leave it. And guess what? It will crash. So, it's like, okay, you know what, 30% is my game plan. If I'm consistent in making 30%, for if 10 of my trades, I make 8 times 30%, I think that's a better way of saving my capital and my profit, Abby, than praying that you make 100% and then lose 70%. So I always say when you're starting out, don't be too ambitious. Are there some days that you could have just entered the trade and it will go up 1,000? Yes, it happens. But does that happen every day? No. So this is a lesson of do not be greedy and say you want to make 1 million in one day with $500. It don't work like that. Mhm. Okay. All right. I'll give, yeah, exactly. Okay. So I'll give you another assignment before you, because you are going to work. Let's go into our chart. So as a swing trader, we open your big chart, the candles. We liked, yeah. So I want you to go up here. Let's do this together. You you see this place where it says candles. See, there's a drop box. Click daily candles. You can open. Is it open? Is it wide? When you, when you are in the stuff in the chart itself, you can now use your mouse to open it up. Click on the click on it. Be inside the box where those candles are and start using like you are scrolling to widen it. Yeah. No, just click inside the yeah, inside that distance and just be like, because I can make mine smaller, I can make it. So as you're in here, see my mouse, you're in here now, just be using your mouse to kind of, if you want it bigger, to be expanding. You're using a mouse, Abby? Are you inside the chat? Yeah. Yeah, it's showing small. So yeah, click on the this thing and widen it. You can, how do I explain this? No, don't right click anything. Just so when you're inside your mouse, instead of pressing the left or the right side, use the middle, that middle ball, middle ball on your mouse. Don't click left or right. No, nothing should be, yeah, nothing should be showing, highlighting or anything. Is it getting bigger? Uh-huh. So is that daily candles? Daily. Okay. Is it big enough? Can you see? Is it big enough for you to see? Okay. Perfect. All right. So remember we said that our candles tell us a story, right? So what does the green candle, if you remember, what did it mean? Calls. No, not calls. Bias. Bias. And red is sellers. Okay, so we're going to draw support and resistance. Remember support. Support is where buyers previously like stepped in and they say, we're going to support this place where, the market cannot, sellers cannot, keep going. We call that the flop. Resistance is where sellers will step in and say, buyers, it's okay. This stock cannot move past like this. So remember, so now to draw our lines on this place, support and resistance. Resistance is the ceiling of a house. Support is the floor. So now I want us to draw our support and resistance. We go to edit. Nope, it's not for anybody. They are called zones. Is zones. So because the market tells us a story, there are places where every time sellers and buyers will agree that this is how much Tesla should cost. Sellers will say no, we'll push it down. Buyers can push up, say no, we'll push. So these stories tell us this push gives us a story, and we can mark the zones. That's what, yes, and we can mark it. So you might see so many support and resistance, but it will not tell you where we are in the market. So let's look for the highest place they met. So a red and a green candle met. So that's where buyers and sellers agree. Hey, this is the resistance. Sellers say you cannot go nowhere. So you open file, then you go down to horizontal line and you click it. Then you see like a red stuff, right? Okay, so we want to look for where they met, right? I'll say this is where they met. Um, I want you to find that's the highest point where they decided. So don't, we are not doing the week, the like you see the candle has like week and body, right? We are drawing it on the body, and it's not just a line, it's a zone. So I can make my, you can right click and say, oh, I want this line to be very thick, right? So yeah, so based on this week, it's telling me at this point of 488, between 488 and 490, they stepped in and sellers say, you can, this is resistance, you can't go more than this. For what? Okay, now let's look for, so right now my stuff is showing me until November. Let's look for, on this your screen now, look for the lowest point and draw another line. That will be our support. Same thing, edit horizontal line. Okay, 391. Um, so let me see where you say you are, 391. Is that really where they met? I think you are further down. Okay. If I were to look at, I see here it's about 390, 400. So I'm looking, it's not the week, right? But I know where you're looking at, like the other place where it's like bottom, the 300, and I see where you are seeing there too. But I want to make sure all of them are really touching. So for here, it touched here, here, here. So I'm going to leave it at that 39. So it's a zone. Right? Like I said, it's not just a line, it's a zone, right? So mine is at 399, 400, 398. So I'll leave it at that because I can see all my lines quite touching. Okay. If you now to make your candle smaller again, you can use that mouse thing and you can draw another line again. for where else again they meet. And I see another place here, 3 363. Remember, this is just daily candles. So every candle means one day. Okay. What did your own come up to? 360? I went down. I went bottom. So anywhere they meet, where if you see that where they meet, like this for 363, they met. Can you see my screen? Big. Yeah, yeah, yeah. Okay, yeah. I made it small just for me to zoom out. So that's something you can always do. You can zoom in and zoom out. About 363 is, yeah. It doesn't have to be perfect, but it's just so you know the zones, right? If you don't see, that's also good. We don't need to go that far down, but it's just so you can see that. I'm going to clean this. Because this is your practice, is going to be your, what's it called, your assignment. Okay, where are we? Don't overflog it because that's what I'm going to give you to practice on you because you draw it and send it to me. Okay, but this is just to show you how to do it. No, it doesn't matter. They meet. Hold on. Okay, let me show you some. Let me show you my screen. Hold on. You can see my screen. Can you see this one? Can you see this? Similar. Yeah. See here. Can you see? Yeah. It doesn't matter because when you see the met here, but it's close. Like I said, it's not a straight line. It's a zone. Yeah. It's not a straight line. The closer that they are that they meet, perfect. But you can see that After this place, nothing has gone up again because you see. So they met here. See this third one. It shouldn't be so different. But if you try, the goal is that if you trace it, yeah, if you trace it, you should be able to see when you keep going back, right? Meeting, yeah. So like this one, the bottom here for this 400, see where they met here is the bottom I use, right? Yes, yeah. But at least they should be touching. If you go, you see this part to kind of meeting also. Then if you keep going to this side, there's one here too. They met here. And it tells me if I'm seeing that it's looking like 10, 20, it tells me true because most times Tesla moves in 5, 10, 20 moves, right? Like this one say 351, then the next is about 363, which is like almost 10. The other one is like 379, which is almost 10. Does that make sense? This 399, yeah. So there could potentially be one here. This 381. You want to be nitty gritty like that. Okay. All right. This will be your practice. You're going to practice this because I'm going to ask you to do your screenshot. So I want to explain this candle so that you can understand what we're seeing. So we're seeing all these beautiful things. The green now we know support and resistance. It helps us tell us where price might be going, what has happened over time. If we go years back, self, you still see these things keep repeating themselves, right? So right now, when market close, can you see it's already at support and resist? Is at support right now at 400? Can you see? Good, because it's at the bottom. This is a support line. Is a support right now, but it could be a resistance at if it keeps going lower, right? If we go all the way down to say we fall, the market falls to a support today can be a resistance tomorrow. Exact. So say for example, it goes to 363, then that means that now becomes a new resistance because that's higher, right? But right now it hasn't gone below, so that's the support level right now. That's a zone. Okay, let me not be confused. That's a zone right now. Let's keep it as simple English. That's a zone right now that we should be watching out for. So this is where knowing what the candles tell you when they're at key levels like this. Let's clean this. Lola, is that making sense? Are you confused? What are you confused about? I want to hear. What are you confused about? Mhm, mhm. Okay, don't be faster than yourself. So we're going to talk about the candle. Okay. So that's why I told you that it's not a 1 day thing, right? Now we know we have drawn our zones. So right now you know how to draw your zones, which you practice this week very, very well. But once you know your zones, now if we talk about the candles, I'll just do 5 minutes, but I think that'll be our key focus next week because Taufik is going to work. But now let's talk about candles. I am going to share my screen because now the candle, you asked a very important questions. How do I know that what's going to happen next based on probability, right? Candle anatomy. Let's look at candle. Okay, bullish reversal. So I forgot to tell you, when market is going up, when we say we're calling it, think about a bull. Bull is like charging forward, right? Bull charging forward. So when you hear, you might hear people say the market is bullish. It means the market is going up. When you hear the market is bearish, it means puts are winning. The market is selling, is going red. Bull charging to the green. Red bear bearing down to the red. Now, how do we know that a market is going to be bullish based on the candle? Sorry. There are three candles. These are reversal patterns, right? We have bearish engulfing. So when you see a green that is like this, sorry, this is bearish, not bullish. A big red, we now see a small green, then we now see a big green. We call this a morning star. So when you think about the morning, things are going to be shining, going up, morning star. When you see these three candles forming near a support, guess what? It tells us that it might be going, it's going up. If you see this hammer, you see this, it looks like a hammer because the wick is very long at the bottom and it's green. It tells us the market is reversing to the upside, bearish and bullish. Okay, now let's look. Then if it's going to go down, we call it bearish. So on this chart, can you show me? I just did morning star, hammer and morning star. Show me on this chart where you see that thing that I just showed us. It might be the hammer, it might be the morning star. Can you see on my screen? Can you identify? So remember, it says bullish. The morning star, you see a big red, small green, then big green with the wick is like small at the top. The small green is like the wick is equal height. But this one, the wick at the top is small, the wick at the bottom is long. When you see the wick at the bottom long, it means buyers really started pushing, so a closed eye. That's why even hammer, buyers pushed it. Exactly. They pushed it, say, we're going up. And that's why there's no wick at the top because sellers did not even stand a chance. Okay, so now let's identify it. Where can we see? See it here. 'No, let me open. Let's open our trading view. Let's go into our own chart itself. Okay. Yeah. Let's look for it here on this our own chart that we drew our lines. Let you see a hammer. 419. Look for it near a trend line, near one of those lines you've drawn. Because it's when it's not when it's in the middle of nowhere. I don't play with it when it's in the middle. When it's close to one of these lines that I've drawn. Let me I'm gonna show you here. Let's see. Look at can you see my screen? What does this look like? Where is the hammer, Abi? So it's a very tiny hammer, but it's a hammer now. Let's see. Because see this week is longer, right? Okay, what about this one? That's a hammer too, right? You can see again. So you see that I'm not going in the middle of nowhere. I'm looking at my exactly this one is a hammer, exactly. So what are you seeing? Perfect. So what are you seeing now that every time this came up, right? Just finished closing here. What happened? The market went up. Abi, you see here, what happened? It went up. What happened here too? Okay. So you see that every time, so that's why when you see such candles, we call it is a confirmation, a signal candle that the market is reversing from where it was going to now is going in the direction of this hammer with the green. It says hammer with the green is going up. If it was hammer with the red, it's not, it's different. So now this candle is telling us this hammer has say, oh, this market is going up. And really it went from 400 and it kept going, and it went all the way to 440-ish. Then came back down a little and went back up again to 450. Right? So if you enter this trade here after this day, you saw that this candle went like this, you can enter here, right? 420, ride it up to this place. For your 30%, you'd have actually made your 30% in that one day anyway. So this is how your candles, you see, you're not doing it in the middle of nowhere. You make sure it got here. You see that it started big candle. Oh, I like this juicy. The candle is really juicy big. And then the next confirmation told you it was still going up. You enter. If there was no line here, I might be skeptical. I might want to wait because I want it to get to a level that has been tested and tried. You don't want to just enter in the middle of nowhere. But if you enter in the middle of nowhere, there's every tendency to pull back, to pull up, you don't know. But if it's pulling up, you know that the next place is pulling up to is what? See where we drew the line? 430. And guess what? Sellers came in to test this place again. Because it has reached the place where they always say, bam, 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 it's not coming. So they came to test, but buyers were too strong. They say, forget it, it's more than 430. They went back, they continued going up. They came again, see this line, they kept dragging, but all this had not happened. We were the ones that drew this time because we now noticed, because obviously other times it has happened before. And we said, bam, bam, they came again, say, come on, what do you mean that Tesla is going to be 450? No, they tried to push it back to 430. Guess what? Buyers came back into the market again and pushed it back up. They came again because they'll always retest that line. So that's why these our lines are very important. Because once you know what keeps happening at that place, you know that okay, once it pulls back here and I see this confirmation candle, I can enter. If you don't see the confirmation candle, well, let's say maybe it's going to pull back down because it always does. They'll always test the same level over and over again. It's been happening for years. It keeps happening over and over again. Okay, now let's see our bullish. Let's just do this for the bullish so that then we can now explain what this candle is showing us for tomorrow for when the market open. Okay, so bearish is when the market is going down, right? So we have this bearish. We just did bullish going up, bull, bear bearing down, put. We see the bearish engulfing is that engulfing just means the one that eats the candle. So you see the green, it started with buyers being happy, but sellers now engulfed it. So if you see these two like this, you know that there's a signal that is about to turn to red. Or you see this, you see it's like hammer, but it's like inverse. It's called a shooting star, right? So you see how you see the line at the top is big, then the candle is now big. Then the one, this one at the bottom is the seller, is the buyers, but they did not win. They could not win because the sellers pushed it. So obviously this thing had gone high as this place, but sellers pushed it back here and market closed there. Okay, so then evening star, if you see, it's big green, buyers are happy, they pushed it down, buyers like this call it a doji because the lines are in between. Then can red will not take over. It's evening star, but let's look for it. So let's look for it on our stuff. Okay, I'm going to clean all these lines because they are messy. Okay, if you see it, call it out to me. We are looking for the bearish signal, yeah. Evening star or shooting star. What about that's this is the bearish evening star, shooting star. Perfect. Yeah. So you can see that they are close to the lines, right? And when this happened, yes, you might be scared, say, oh, then it became green again. But guess what happened? It became red again, and market started going down. The occasional, anytime you are near a trend line, guess what happens? Buyers want to step in as well, right? Because it's going to retest that same line. But guess what? Because you still see the candle, you see how it's still red. He said no. If this was a green, if this one was a green, I would think this would have said it was going to go back up, right? If it was a green, it would have been a confirmation. But is buyers stepped in, but it's still red, still won. So if I would have not entered here, I won't enter here if I wasn't sure, because I wasn't sure that okay, this might be a signal that it's still going to be a what did they call them put. But when this one appeared, I was like, not really. This one, not really. As soon as this one appears, guess what? I'm gonna buy a put because it has tested on this line and is rejecting it and it just keep going down. This was a big two candle that day. So from 440, it went down to 390. That's like, I think I remember what this day here. That was last year because it went down 20 points. I think something happened that day. It went down like 20 something points. See it now, more than said 440. Yeah, that day went to 420 that day. It went 20 points down. Then the next day continued to 390. That's almost 50, right? So you see those candles, they are telling us a story. See this one now, it came back, it rejected. Green tried again for where red was still winning. Here again, it showed you that it's coming back. At this point, I will enter a put, and you just, when you make your 10% or whatever, you can, if you have done 10%, you probably have come out here already for it to keep going down. When it gets to one of your line again, it might they might retest it again as usual, because this is a line that has been tested before. But unfortunately, it didn't even retest again. It went down. But now it tested this place because this is a key level again, and retested again. That's why green appeared here to say, okay, buyer say, okay, I beg, you don't do now. Oh, yeah, we need this stock to seller say no. Sure, you can see the wick. The week is that the sellers pushed it. The thing came, this green was not this small before, it came up to here. Sellers pushed it, so that's why the week is long. When they pushed it, as soon as you see this is another reversal, you can still enter here and go back here. Here, see, this is a hammer. As soon as this, I see this one, guess what? I'll enter to go up because it's at the key level, and this is a hammer. It's signaling back up. Okay, now let's look at for this last one that appeared. This candle, you can see it's small and it's red, and it's like the two sides are the same. Can you see the two sides are kind of equal? We call that a doji candle. It's indecisive. You are not going to, and it's this first, the last one, as at yesterday, as at Friday, the way the market, the candle for Friday. This the last candle at on. Okay, so dojis like this, when they are both equal like this sometimes, and it's very thin, it's like it's not even fat, it doesn't really have a body, it's so thin, even like this. But you see, this one would have been a doji, but you see, this side is long, so it can't be a doji. This is actually a reversal, the hammer, right? But this one, both sides are equal. Buyers and sellers are equal in the fight. We don't know who will win this fight. So guess what? We will not enter a trade. We'll wait for Monday morning. I think they've already started trading because I just saw my stuff moving. And it's going down. So you wait for Monday morning and see the next candle that will appear. So that's where you now maybe use the 4 hours candle. I think they've started trading already because in some countries like the market has already opened. It's actually going down 399. So you wait. But from this candle right here, I can tell, see this reversal here. Can you see this candle here? The wick is longer. Yes, this green one. But the wick is longer. It means this candle opened green because it was going up and it was green. Then sellers pushed it back. That's why this one came red. And this is a hammer red. So it tells me the market is still going down. And it did go down. But now this last candle, by when it closed, they are indecisive and they're at a key level. So we'll wait for the market to open tomorrow. Tonight we'll read the news, what is happening in the world, because things happening around the world also affect stock markets. Is there anything happening this week? Is there any holiday? Is there, as Tesla's Elon Musk said something? Has Trump said anything? Are they fighting? Things, little things like that, right? But when the market open, the next candle we see will determine. So if the next candle that appears is a big red, and is red and it breaks out of this what's it called, this line, and goes down, I'm buying a put, I'm not buying a call. Okay, if it goes up, that means it's going to reverse. But if it exactly, but if it breaks out of here, you are going down, not going up. But as a swing trader, if okay, we know that what we want to buy 5 months out, and we know that this 397 is a very nice, see, 397 to 490, that's almost 100 points, right? And we know it's been going between 395 or 397, 400 to 430. You know what? I can enter here if I'm going to buy, because this is a good point where it always draws back to. I can enter here for a call to go up, but I'm going to buy out far, because I've known from the market trend that anytime it pulls back here, I can load up and wait for it to go back up. There are some people that don't like trading put at all. They only just wait for it to come back down to that cheap level and they enter. That could be you. So you say, okay, you know what? It's at 390, and we've always seen that every time it comes back here, it always pulls back up. You know what? If it gets down to 390, which is this long stop, I will enter for going back up. But I'm gonna buy at least 4 months out, because I know definitely it's gonna pull back up, right? Some people are like that. That's all they do. They only trade calls and they wait for it to get down to a key level that is always coming down to, and they say, okay, you know what, it's going to go back up, and they enter. So if that were the case, so if this is the case, I would say, okay, you know what, I think this part is a good, I think maybe if it pulls back, it might come back up. We cannot go to our chart and say, let us buy. So let us do that together. Let's, in our play market, let's say, is that me? Okay. Oh, is your internet? All right. So let's say, okay, yes, market is here. So we are going to open our, what's it called? We're going to open June 18th. So let's say we have, let's see, let's say we have June 18th, 109 days. And we want to buy in the morning because we have 4,500. So we want to, or we have 4,200. So we'll go to strike 405. We're calling it up, right? Yeah. Or 4,100. Pick any amount. How much do you have? Just pick any amount. We're in a trading account, but I want us to be learning how to trade in this sweet place, that, yeah, so that our goal is to make money, to be able to buy, because that's where you make your money without stress. Say we have 405, okay? So we click buy. So it says June 18. You want to always read it. June 18, 405, and it says my delta is 0.559. Okay, I'm happy. Is this how much I want to buy it? You now go down where it says order, limit, quantity, blah blah blah. Can you see that? So you want to put your price. Hmm. Did you see? Okay. No, no, you can remove the candle. Yeah, your option. Yes, yes. You have to open that strategy builder. So did you click buy already? Once you click buy, on the axe, now the axe, when you are in that, the 4155, you click on it, it will appear down. Yes, yeah. Once you click on it, it should show down, it should appear at the bottom. Uh-huh. Can you make that thing bigger? See how it's showing. Can you see? Oh, I think you have so many things open there. Clear all legs. Clear all legs. Clear all legs. Ah, please be mindful of that. Because you're about to buy so many right now. So click only on that one. Yeah, strike 405 and buy. Yeah, so it's there now, right? It's only one. Yeah, that's it. It's already showing at the bottom now. It's showing at the bottom. So at the bottom where you see that it told you the delta. Look at the bottom again. Okay, I think you should raise your, what's it called? Your arrow. I think your arrow. Can you show me your screen? Can you share your screen with me? Yeah. See it at the bottom there. Can you see it at the bottom? I think you just need to see it at the bottom. Okay. You've seen it now? Uh-huh. Perfect. So you can see the order entry, limits, quantity. Okay, so now in the limit price, you are going to put how much you are going to buy that thing. So let's say we only have $4,000. So you put 4.0, right? You must put your price. It says 4155, but we know that we want to buy it at 4,000. So put four limit where it says limit something debit. Yes, type it. Yeah. 4.0, just 4.0. That's four. Yeah. Enter. Okay. So it says day. It means if at the end of the market day it doesn't get to 4,000, it won't buy. We'll say okay, no problem. Then submit order. Does that make sense? So it says order limit quantity one. If you're buying more than one, you change the quantity. If you're buying two contracts, five contracts, that's where you change it. But we're buying only one. We'll say 4,000. That's how much we are willing to invest. And it's going to be for the day. So even if it doesn't get to 4,000, it will not buy. If it gets to 4,000, it will buy. I like to put my own price because sometimes when the market open, it might pull down a little bit, right? So because this is the last price, it's telling us that it was on Friday. Now submit order. At your right side, it will say submit order. Yeah, submit. This is your, so it's just so a graph will come out. It's telling you that this thing, the profit, whatever is 36%, your max return is infinite. It doesn't know how long it can make where is a lot you get. But if you lose anything, you only lose what you put in. You say, okay. So it's telling you that if you make 10%, you'll be making 2,400. So it calculates it for you down here. 2,400. So if you make, imagine, so if you make 20%, you're making 5,000 on that. 30% will be $8,000. Okay. So you say, okay, yeah, oh yeah. If you say, oh, like me, that I only do 10%, right? You make your 20, 30%, sorry. You make your 8 grand. That is telling you, it already tells you how much. If you are saying, okay, I'm starting small, let me just be managing 10% for now. It has already told you if your this is 10%. So you can already put the calculation there that you'll be making 2,400 for just 10% move of that. If it's 20%, it's 5 grand. If it's 30%, it's 8 grand. So that is where you see it here. Say profit and loss. If you lose 10%, you see it, you lose 1,900. 20% you lose 3,000. 30% 3,800. But you see your gain, because the time is far, you are not really losing. Can you see when your gain is even more than what you lose, because your time is, you are still very far. Okay. So you say override and transmit. Override and transmit. Say yes. You say you're not trading with market data because we are not using we have to say that, or you have not done market data, so it's not showing. I'm just using mine to say yes, I know. Hmm? What's it saying? Just say yes. Allow, yeah, just say yes, accept. Don't ask me again. Just say yeah. What's it saying? Okay. Then when you look up on your, you see that others, you see that there's a mark on top, say others one. Okay, you can click that button. It just tells you that they haven't fulfilled your trade here because it's not a market day, right? But it will show on your, when you go to your, when you open that page, to show you here that you have an order to buy at Tesla June 18 at 4,000, but it's not filled. When it fills, it will it will say bought, right? Yeah. Okay, now you don't have to do it, you have to wait for it to buy before you can now put your profit yourself. Exactly. So tomorrow, if it buys, I want you to open this app tomorrow and see what it's saying. You can actually open, you can even use your phone now, as in like when you can use your phone and you still see it, the IBKR. Make sure you're in paper trading, you can see it there. So if 4,000, how much is 10%? Will be 10% will be 400. So when you put when it does what do they call it, when it has bought, you will now go into that Tesla, and you now say that same one that has bought, you will not see it, it will not come up on your portfolio, it will not come up here, and you see it, you'll be seeing your daily, you see your profit and loss. You will not click on that one, and you now do sell. Once you click on it, it will appear on this your strategy builder, and it will be sell. You now put your price. But I think I'll show you that tomorrow when we wake up. If it sells, I'll look at it, because to sell is a different ball game entirely. But let me show you a way to even tell. June 18th, 4:05. Do like this. Okay, yeah, we are ending here now, Tafik. Okay. So your assignment, um, Abby, is to draw this support and resistance, and you take a snapshot of it as far as use your daily candle. I want you to change your stuff to daily candle. I'll send it to you as email, your assignment. But you're going to draw on daily candle, your support and resistance. Then you change to 4 hours, and also find support and resistance. So you do the daily, you draw your support and resistance, you snapshot it, you send it to me. You do for 4 hours, support and resistance, snapshot, send it to me. This week is to learn support and resistance. Then the candles, I'll tell you to identify candles. When you do the daily, the candles to identify. Does that make sense? And that's why you need the practice to understand it. So when this video finish now, I would send the this thing, so you will watch the candle again. I can send you a snapshot of the, what's it called? The candle, so you know what you're looking for. Does that make sense? Yeah, I'll send you a snapshot of like my the images, so you can use it for the assignment. But that's your goal this week, is to be able to identify your support and resistance and be able to tell the candle patterns. And then we're going to sell this one that we have put in the market. Those are the things we're going to do this week. But if you don't understand the basics, wahala today, so that we don't lose money, okay? All right. 6:30, me and you, we can talk. Okay, let me stop recording. All right, bye. All right. Yeah, yeah.